This is SoFi's investor presentation for the first quarter of 2026. Released in April 2026, this document serves as a critical indicator of how SoFi, a leader in fintech innovation, has kicked off its fiscal year. An investor presentation is a strategic briefing where a company communicates its financial health, operational performance, and future roadmap to its shareholders and potential investors. Since the first quarter often sets the tone for the entire year's performance, analyzing these results is crucial for predicting the company's trajectory and market positioning. We will now take a deep dive into the specific data to evaluate SoFi's competitive edge as it continues to evolve from a lending specialist into a comprehensive digital banking powerhouse. SoFi's Q1 2026 performance demonstrates truly remarkable growth and efficiency. Looking at the financials, adjusted net revenue reached $1.1 billion, a surging 41% increase year-over-year. Adjusted net revenue refers to the actual money earned from core business operations, excluding one-time items. A key highlight is the $167 million in GAAP net income, marking their 10th consecutive quarter of profitability. GAAP net income is the official profit measured by standard accounting rules, signaling that SoFi has firmly entered a stable profit-making phase. Adjusted EBITDA also stood strong at $340 million with a high 31% margin. EBITDA represents earnings before interest, taxes, and other non-operating costs, serving as a vital metric for a company's cash-generating power. Total deposits grew by $2.7 billion over the previous quarter, surpassing the $40 billion mark and proving SoFi's robust funding capabilities. On the operational side, the Everything app strategy is paying off. They added 1.1 million new members and 1.8 million new products, while the cross-buy rate, the percentage of customers using multiple services, climbed to 43%, reflecting strengthened customer loyalty. Furthermore, the launch of Big Business Banking and the enhancement of the SoFi Plus subscription model are expected to diversify revenue streams even further. In conclusion, SoFi is evolving beyond a simple fintech startup into a comprehensive financial platform with solid profitability and significant brand power. This slide clearly illustrates SoFi's core values and its strategic vision for the future. The headline, Durable Growth and Strong Returns, emphasizes the fundamental strength that investors prioritize most. Durable growth refers to a sustainable expansion that remains resilient and continues an upward trajectory even amidst market volatility, rather than being a short-term spike. To achieve this, SoFi has identified continuous innovation and brand building as its two primary pillars. This strategy signifies a commitment to innovating the user experience through technology while leveraging brand power to earn customer trust and improve marketing efficiency. Especially in the increasingly competitive fintech landscape, this strategic direction is expected to be a key driver for long-term corporate value. In conclusion, SoFi is expressing a strong ambition to evolve from a simple lending platform into a comprehensive financial ecosystem by integrating cutting-edge technology with a trusted brand. This timeline illustrating SoFi's growth trajectory represents more than just a history, it reveals a strategic evolution. Starting with CEO Anthony Noto joining in 2018, SoFi shifted from a niche student loan lender to a comprehensive financial super app. A critical turning point in this journey was acquiring a bank charter. A bank charter is an official license that allows a fintech to hold deposits and lend its own capital, significantly boosting profit margins by eliminating third-party banking fees. From 1 million members in 2020, SoFi scaled to 10 million in 2024, with a forecast of 14.7 million by 2026. The key driver here is vertical integration. By acquiring technology platforms like Galileo and Technisys, SoFi now owns the infrastructure that other fintechs use. Looking ahead to 2026, the launch of their own stablecoin, SoFi USD, and an expansion into big business banking indicate an ambition to create a self-sustaining financial ecosystem. This relentless pace of innovation is designed to increase products per member, enhancing the lock-in effect and securing long-term profitability in a competitive market. This slide encapsulates SoFi's vision of becoming the everything app for digital financial services. Observe how they have integrated banking, investing, loans, and crypto into a single, seamless ecosystem. In the banking section, the high 4.6% APY and $2 million FDIC insurance coverage are particularly striking. APY, or annual percentage yield, is the real rate of return on an investment or deposit that takes into account the effect of compounding interest over a year. FDIC insurance is a government guarantee that protects your deposits even if the bank faces financial failure. These competitive rates serve as a powerful lock-in mechanism for new users. Furthermore, the platform offers tailored investment insights and a streamlined process for student loan refinancing and personal loans. By incorporating a crypto service that supports dozens of tokens like Bitcoin and Ethereum, SoFi completes its comprehensive asset management suite. This integrated strategy is designed to maximize the lifetime value of each customer while significantly reducing acquisition costs through cross-selling. Ultimately, SoFi is building a formidable platform moat where every financial activity of a user feeds into a virtuous cycle of growth. This slide illustrates how SoFi's strategic brand building is translating into market leadership and record engagement. A standout metric is unaided brand awareness, which has seen a 2.2x increase, rising from 4.5% in 2022 to 10% by the first quarter of 2026. Unaided brand awareness refers to the percentage of consumers who can recall a brand spontaneously without any prompts, signifying its organic market presence. Parallel to this, the membership base has surged from 5.2 million to 14.7 million, representing a CAGR of 38%. CAGR, or compound annual growth rate, measures the average annual growth over a period, highlighting the company's consistent and rapid scalability. These growth drivers have culminated in prestigious accolades, including being ranked as the #1 U.S. bank by Forbes and the top choice for DIY investing by J.D. Power in 2026. This combination of rapid member acquisition and top-tier industry recognition confirms SoFi's position as a dominant force in the evolving financial landscape. The Financial Services Productivity Loop, or FSPL, serves as the core engine of SoFi's growth strategy. This model aims for a one-stop-shop structure that integrates lending and financial services into a single ecosystem to maximize member retention. To clarify, the productivity loop is a virtuous cycle where profits from one product lower the costs of others, accelerating overall growth. Looking at the loop in the center, you can see how members who join for student or personal loans transition into various services like credit cards, investing, and crypto. A particularly striking metric is the XBuy rate, which accelerated to 43% in Q1 26. XBuy or cross-buying refers to a single customer utilizing two or more different financial products, which drastically reduces customer acquisition costs. Furthermore, the unit economics are improving, leading to a higher lifetime value or LTV. Unit economics measures the profitability per individual customer, while LTV represents the total profit a customer generates over their entire relationship with the company. This virtuous cycle indicates that SoFi is building a sustainable competitive advantage that is difficult for other fintech firms to replicate. Ultimately, this structural efficiency, powered by their advanced technology platform, will be the decisive factor in expanding their future market share. Let's analyze the Rule of 40 chart, a premier benchmark for evaluating the health of high-growth fintech companies. The Rule of 40 is a financial rule of thumb suggesting that a company's combined revenue growth rate and profit margin should exceed 40% to be considered elite. SoFi has consistently outperformed this, maintaining a remarkable 4.5-year average of 59%. Looking at the stacked bars, you can see the balance between adjusted net revenue growth in gray and adjusted EBITDA margin in dark blue. Adjusted EBITDA margin measures a company's operational profitability by looking at earnings before interest, taxes, and non-cash expenses, reflecting pure cash-generating power. Notice the strategic shift, while 4Q21 was driven by a 54% growth rate. The projections for 1Q26 show the margin expanding to 31%, indicating a transition toward high-quality, profitable growth. This trajectory demonstrates SoFi's ability to scale efficiently while maintaining margins that far exceed legacy financial institutions. This data positions SoFi in the rarefied air of top-tier technology companies, showcasing a sustainable and highly competitive business model. This slide outlines SoFi's strategic roadmap for sustainable growth and enhanced profitability. Looking at the adjusted net revenue chart on the left, the company projects a surge from $1.5 billion in 2022 to nearly $7.9 billion by 2028. Adjusted net revenue is a financial metric that excludes non-recurring items to provide a clearer picture of the company's actual business performance. The projected 30% CAGR, or compound annual growth rate, which measures the mean annual growth rate over a specific period, indicates a highly aggressive expansion strategy compared to industry peers. The trajectory of adjusted earnings per share, or EPS, is even more remarkable. After a loss in 2022, SoFi achieved a turnaround in 2024 and expects EPS to climb as high as $1.12 by 2028. EPS represents the portion of a company's profit allocated to each outstanding share of common stock, serving as a key indicator of shareholder value. The fact that the EPS growth rate of 38 to 42% outpaces revenue growth suggests significant operating leverage, where profits increase faster than costs as the business scales. Several key pillars support these ambitious financial targets. SoFi is targeting the massive $1 trillion U.S. credit card debt market through its personal loan refinancing products while expanding its presence in student and home loans. Furthermore, having less than 1% of the current deposit and investment market share represents a massive white space for future customer acquisition. By integrating AI and proprietary technology solutions, SoFi is transforming into a high-margin financial technology platform, ensuring a durable and diversified revenue stream for the long term. SoFi has unveiled a strategic roadmap leveraging its national bank charter to redefine the landscape of digital financial services. Starting in Q4 2025, the core of these initiatives lies in merging the rigorous regulatory standards of traditional banking with the innovative power of blockchain technology. Notably, SoFi Crypto will allow members to trade digital assets directly from FDIC-insured accounts, maximizing security for retail investors. FDIC insurance is a government-backed guarantee that protects your deposits up to a specific limit if a bank fails. Furthermore, the launch of SoFi USD, a stablecoin backed by cash held at the Federal Reserve, indicates a robust approach to eliminating liquidity risk, serving as a powerful confidence indicator for the market. A stablecoin is a type of cryptocurrency designed to maintain a steady value by being pegged one-to-one to a fiat currency like the US dollar. By 2026, the company plans to aggressively expand into the B2B sector through the AI-powered SoFi Coach and SoFi Technology Solutions. The term core ledger refers to the central record-keeping system used by banks to track all transactions and balances. Offering this as a service signifies SoFi's evolution into a dominant financial technology platform. This construction of a holistic ecosystem is expected to diversify SoFi's revenue streams and act as a major catalyst for capturing significant market share.